Well, Apple's latest products will pose a test for the tech giant's growth during the holiday season. Demand and fulfillment of orders certainly going to be closely watched as the company looks to also navigate past some headwinds in China. Our next guest says the company may not be able to rely on strong iPhone sales to drive its share price higher. Let's bring in D.A. Davidson, Managing Director and Senior Research Analyst Tom Forte. Tom, you got a neutral rating on the stock and a price target of $180 a share. Something tells me in your notes that you're not that excited about this launch.
No, I think Dan made some excellent points there about why this may not motivate consumers to upgrade their iPhones. But yeah, basically, if you look at either macroeconomic challenges in China, and China's about 10% of sales for Apple, or the fact that, at least from my vantage point, a titanium iPhone or an iPhone essentially with OnStar, things of that nature, I don't think that's going to move the needle for the stock. The company, for its part, already told us that it expects revenue to once again decline in the September quarter, despite the fact they're launching the new iPhone today, September 22nd. So yeah, I think there's reasons to continue to be cautious about the stock, despite the new iPhone lineup.
Here's what the bull case is, Tom, so let me get your reaction. The bulls would say it's less about the features and it's more about that big potential pool of upgraders. And they'll argue, listen, there's about, and you know these arguments, Tom, they'll say there's about 1 billion iPhones out there in the wild. There are hundreds of millions of those phones that are older, 3-4 years. And even small changes, small improvements can motivate those folks to upgrade. What is your response to that bull thesis?
So my response is the most bullish I can get is that the carriers are still wildly subsidizing consumers to get the latest and greatest iPhone. So a month or two before the launch, I was concerned that there would be less subsidies by the carriers. But the good news is they want to leverage the billions of dollars they spent in upgrading their networks to 5G. I still think the 5G network is the best reason for a consumer to upgrade an older iPhone to a newer one. So that would be, I guess, my take on the bull thesis. The good news is that the carriers are still supporting Apple here.
Tom, I want to get back to what you were saying about China. Obviously a big focus here, given Apple gets a decent chunk of its revenue from the market. Is the concern here about the consumer maybe looking at other brands a la Huawei, domestic players, or is it about the consumer pulling back and not willing to shell out that amount of money it takes for another upgrade?
Yeah, it's more the latter. So I'm concerned about the macroeconomic climate in China. I think Apple benefited from an initial boost when the COVID zero policy was ended by the government there late calendar last year. But the fact that you see soft numbers from the Chinese economy, yes, the iPhone, generally speaking, has benefited. Consumers have treated it more like a consumer staple good than a discretionary one. But I am concerned that on a tough macro climate in China, China being 10% of Apple's sales, we may not see the strong revenue there to drive the stock higher from current levels.